Hey everyone, welcome to this week's Forex forecast for the week ending the 11th of December 2020. I'm TraderBart and this week I'll be looking at GBP USD, USD CAD, GBP JPY and XAUUSD. Just a quick disclaimer, this video is for educational and informational purposes only. This video should not be construed as financial advice regarding the purchase or sale of any financial instrument of any kind. For the full disclaimer, please head to my website, link below. Going straight into the first part of the video, we're looking at GBP USD on the daily time frame. Going into technicals first, I've been pointing out this long-term ascending channel that's been formed since the COVID-19 crash back in March earlier this year. And inside the channel, we can see that price has formed a rising wedge pattern. Zooming in to look at the price action candles, price closed off for the week with a shooting star candle, suggesting a possible bearish move for the week ahead, as bulls were not able to push and hold price above the previous higher high in this ascending channel. Switching over to the 4-hour time frame, since October, price has been consolidating and breaking through key levels in the market. For example, notice how this 1.315 level was seen as resistance multiple times. We can see it here, a bit here, a bit here, over here. However, as you can see, once price broke it or broke through the resistance, price pushed up, retested and now treated it as new support. This same principle occurred with the 1.328 level. It was seen as clear resistance here, here. However, price broke through and then over here was seen as clear support. And now finally, we've got this same principle again at this 1.34 level, which is also the resistance of this higher high in the channel on the daily time frame. Price treated it as resistance here, here, but then we saw the breakthrough and now we are currently pretty much retesting this previous resistance as new support here. I'm hoping in the week ahead that we could see price reject this level, confirm it as new support, and push price higher in the ascending channel. We do have this rising wedge pattern here, so there is a chance that we could see a break to the downside, a retest, and then a continued bearish move. Jumping into fundamentals now, we're most likely going to have a deal in the UK-EU Brexit talks. We were supposed to have this by the end of this week. However, both parties have yet to reach an agreement on 3 final topics related to fisheries, state aid and financial equivalents. A base case of the deal will strengthen the pound and push price upwards towards 1.40. I also shared in my private Discord group that Danske Bank, hopefully I said that correctly, is shorting the Euro GBP, so this also backs a bullish move on the pound, as they are also on the side that the pound will strengthen more against the euro. Overall, however, I think we could see some short-term bearish moves if price falls back again below the 1.34 level. However, if we get a confirmed Brexit deal by then, I'm expecting the pound to be bullish and head straight towards the 1.40 level here. Going into our second pair, looking at USD CAD on the weekly time frame, we've just seen price break through the major support at 1.30 of this descending triangle pattern. Price has now closed off for the week at one of the higher lows from this channel here. And focusing primarily on technicals, I think it's likely that we could see price break through every single support formed by the higher lows in the channel. And looking at the economies of both currencies, we all know the dollar is very weak at the moment, primarily due to the continued uproar in coronavirus cases in the US, now approaching 15 million cases and 300,000 deaths. In addition to this, policy easing from the FOMC is already at unprecedented levels, and expectations regarding the duration and extent of the emergency measures will continue to influence the dollar's fundamental outlook. Further and more aggressive easing from the Fed will likely weigh on the dollar, while expectations for eventual tapering and policy normalization will likely prove supportive. On the other hand, however, the Canadian dollar is looking a lot better. The GDP for the third quarter was printed at 8.9% and 40.5% annualized. Though it was a big improvement for the second quarter's GDP, it still missed expectations with market consensus at 47.6% and minimum expectation of 43.1%. Also, as oil is Canada's largest export, accounting for over 17%, it is highly correlated with oil prices, strengthening when oil prices rally and weakening when oil prices fall. For this reason, on this pair I am looking to catch a bearish move, as oil prices are expected to increase in the next couple months, and unless we see a major breakthrough in the US risk outlook, weakness should continue to push the dollar lower. So, GJ, similar formation as GBP USD mentioned earlier in the video, is also travelling in an ascending channel since the COVID crash back in March. And looking closely, we've got this ascending triangle pattern formed here. We can see price has broken out of the 137.6 resistance here, retested, confirmed as new support here, and is now currently consolidating around the 139.7 resistance, which was formed after the initial breakout. I'm still expecting this chart pattern to make a full move to the upside and also create the next swing in the market, looking for targets around the 147 level. Focusing primarily on fundamentals now, as mentioned earlier in my GBP USD explanation, I'm not going to repeat everything I said, but due to the likely Brexit deal agreement, we should see the pound gain in heaps of strength. And this will especially happen against overvalued and low yielding currencies. The coronavirus and global economic outlook will remain heavily influential on the yen, with the currency likely to once again see a renewed bid from the rising number of second waves and their implications for the global economy. However, with a consistently positive current account and incredibly low interest rates in Japan, the yen has become synonymous with the term safe haven. As the world's leading creditor nation, times of uncertainty result in repatriation flows supporting the yen. At the same time, as investors often use the yen as a funding currency due to Japan's low interest rates, investors are often forced to buy the yen to close their risky positions when markets shift the risk off. This also further supports the currency. As a whole, the yen so far is doing good, recovering from the coronavirus, but I'm hoping the pound could take over as the UK and EU Brexit talks conclude to a deal agreement. And finally, looking at gold on the daily time frame, we've got this clean bullish flag pattern with a descending channel formed, and price is now approaching the 1855 support from this descending triangle pattern after touching the channel's support and reversing to the upside. I think as of right now, it's a bit unclear what could happen next. As suggested by the arrows, I recommend waiting to see how price reacts to that key level, if we see a touch and a rejection and then a continued move to the downside, or if we see price break through, retest, confirm as new support, and then continue pushing higher towards the channel top and further. Also, notice how when we line up the fib retracement level, the third touch is touching the 78.6 retracement level, so this could also be used as some extra confluation for a possible bullish move on this pair. Not only this, over the past year or so, we've seen that every time price has approached the 200-day moving average, like here, kind of, we've seen a strong bullish move to the upside, as I'm showing now. And since we just crossed the 200-day moving average recently, this could also point to a possible strong bullish move happening again, as it's happened historically. In addition to this, as the dollar is weakening due to all the examples mentioned in the USD CAD explanation, and gold being a safe haven, it's expected to rise in value, as it's known for at least maintaining its value. However, it's predicted to reach crazy numbers within the next 5 to 10 years I've seen. So that was just a little explanation as to why we could possibly see a bullish move on this pair. Anyways guys, thank you all for watching. I hope I've helped you gain a better view of the market outlook ahead. Please help me out by subscribing, liking and commenting, and share your thoughts whether you agree or disagree with what I said in the video down below. Apart from that, hopefully I'll see you guys next week for another weekly Forex forecast. Take care everyone.